Indiacharts publishes Nifty Daily, daily video updates, the weekly Elliott Wave outlook, and the long short report covering all asset classes.
The trick question for me remains what will happen at this fag end of the euro dollar currency thing. And even while that remains on the edge, we have seen overnight moves in US sectoral indices, which is still one of the lead indicators of what is really happening. So as much as we would think that, if the Russia war ends, commodity prices will come down, and has oil gone so far? And even I bother because a lot of people do mention that they want to be underweight this fundamentally on this sector, but when you look at the price action, it says something completely different. So if you look at here, you have the basic materials and resources index. It's sort of consolidated here, which we can say whether it was a second wave or whatever, and then it's broken out and is in a fresh rally, very similar to what we have already discussed and seen in the US metal index, a long consolidation, and now it has started a fresh momentum, which we have marked as 1212 and ongoing. So this also made a new high yesterday, and so did the oil and gas index, which we've been focusing on, benefiting from the rising oil prices. So you have the oil and gas sector. So basically it's energy, power, commodities. All of these sectors have been doing well, both before and after the Russian invasion. So that may or may not be the primary factor. It appears like that, and whenever the conflict ends, if at all it does soon, then we may see a reaction in some of those markets, but you just cannot say that with certainty. And so what we'll really focus on then is just what the charts are telling us about those sectors. So we're looking at Nifty oil and gas sector making a new high, driven by probably a 4% move in Reliance. The CPSE or the PSE or Public Sector Enterprises Index also making a new high. I discussed it yesterday, and has been driven by many of the oil and energy names also, because a lot of them are public sector companies, and so that rubs off on the energy index, right? So these have been the top, and the fourth top performer again is metals, and then there's the commodity, and then PSU Bank. Now PSU Bank has not been as brilliant as the PSE index itself, though it didn't break the 20 DMA in the recent correction, just like it didn't break here, which is why I'm maintaining the positive bias. Then if we simply move on to mid and small cap stocks, the small cap index is also just above the 20 DMA, needs watching. Doesn't look like a very strong candle. If I really zoom in here, it looks like it opened higher, it's slightly lower. So you want to see that little bit of strength in the candle patterns, which is missing. Like you want a positive candle at least, which means the closing is higher than the opening. That's not really visible in, I think, the small cap or mid caps. Looks like a doji pattern. In fact, even in the case of Nifty, so we come back to our main indices, Nifty also is opened higher, is slightly lower than that. So while it may close positive, completing this ABC correction that I was looking for, and if it does that, it will be more like WXY on the hourly chart, because it's more complex. And what it leaves open therefore is, do we really get 5 down in C on the hourly chart? That's one of my doubts here, because this can be taken as a 5-wave decline. If this is 5, then A, B and C also should be 5. In which case this is 1, 2, 3. What is we are seeing today is 4. And if the Nifty does sell off and retest this low today, tomorrow, for all we'll do 5 of C and then actually start on the way up. And in which case you might end up testing the 50% retracement mark, or simply the 17,000 swing low over here. 50% is at around 16,895. So somewhere in that range, 16,895 to 17,000 will remain an open possibility till we actually break out on the upside and maybe go above at least the 20-hour average to start with, which is at 17,329 right now. So close above that, holding above that would be the first sign that this fall is over. The second is breaking out of the falling channel. The falling channel is much higher right now at 17,460. So the 20-hour will be the first sign, I think. And So despite if we close positive or negative today, it's possible that because this is not completed 5 waves, the hourly chart will still allow for one more dip before we complete ABC and start up. So that's one doubt which I'm not able to clear, and therefore I'll have to just leave it open that this can be A, this can be B, and C has to be 1, 2, 3, 4, and there may just be a fifth. It doesn't have to be as big as 1, 2, 3, but some dip below this previous low, testing either one of these previous lows that we made at 17,003 or the 50% retracement before we start out stronger. And this we will come to know also from today's close. Like I said, if you get today's candle, if it is a bearish candle, which is the close is lower than the open, it always leaves open this doubt. Sometimes you get a retest. It's not a strong candle, and even though it closes positive, giving us an indication that the positive close is a bullish sign, it retests the low. So we'll look at that. Now in Bank Nifty, you can get a little more positive feel because C and E are almost equal. We didn't break much below the lower channel, and B might only be here, so C may be complete. So now in Bank Nifty, we can say that with a little more confidence that maybe ABC is done. Of course, we'll watch the candle here also, and if it's a positive candle and closes above the 20 and 40-day averages, which are close to 36,800, then we do have a setup for higher highs from here. And the Bank Nifty count is slightly different. Instead of taking entire one, I will take it as 1, 2, 1, 2 and start 3 of 3 from here. So the Bank Nifty probably gives a little more stronger indication of a 3 of 3 start compared to the Nifty. The Nifty I am trying to consider whether it can overall be a larger 1 and 2. Of course, this low has not broken this low. We haven't gone below 17,003. So we can still do the 1, 2, 1, 2 for Nifty as well. It's there in couple of sector indices, but not all of them. For example, even if we go to the mid-cap index, okay, the mid-cap index also, when we look at the weekly chart, both mid-cap and small-cap, they're one clean swing. Okay, so it's not like an ABC structure. It's like all the way up and then it turned down. Same in the small-cap. And when we go to the daily chart, we actually have nine waves from bottom to top. So that is why it's possible to consider that, okay, is it 5? But counting 5 on the daily with a proper 1, 2, 3 and a third not being the shortest is a little difficult. So only by number of legs we are fitting it in, which is why 1, 2, 1, 2 is still an option. So we'll see which is the correct count. We'll only come to know, I think, at least another day or two. This week, pre-expiry week can always confuse. So pre-expiry week did its damage right on day 1. And once the damage is done, I think by the weekend only we come to know, okay, the damage is done and we are recovering from there. So whether there's any more damage or any missing move to the downside, only in Nifty, like I said, I can see that. Bank Nifty, I can't. Mid and small cap indices not so clear on the daily, but the weekly chart says that they could be a wave 2 dip, in which case they may find support here. And so we will watch out for that. But focus on the right sectors. That's what I think has worked so far, because we've seen certain sectors do particularly well. Today, of course, the oil and gas sectors being aided by Reliance Industries. So there we'll probably consider it separately. Is it wave 1, 2, 3 happening? And then within this Coal India also sort of, I don't know whether it took it out, taking out this entire range. Okay, so it looks like then is it a new move starting? Even though the momentum indicator did not go back down, it is just whipsawing here. And so prices have held above the 20-day average. So these are the kind of setups you are seeing, apart from Nifty, which has fallen a lot on the back of IT and HDFC Twins, which have a higher weightage. The individual stocks have actually not shown the same kind of loss. So we look at again IOC from the OMC's oil pack, and then metal stocks, which are holding up today. And so those are I think still the areas of strength as far as I can think. So the main, so I guess I'll continue to focus on those sectors, though I really wanted to get, a little more broad based. It's always nice to see sectors like auto and banking to start participating on the upside. Bank Nifty, hopefully if it closes above the averages, would be a signal that it will start leading. So then that only leaves us with the auto sector. Will that, so this is the CNX auto, will that really drive up? And here also, can I really do 5 waves, or is it 1, 2, 1, 2? So the way to do 5 waves is 3, 4 and then 5 truncated at this point. Then I can take this whole thing as 5 and say this is an overall 1 and 2 and 3 is starting. Otherwise, I'll have to do a 1, 2, 1, 2 here also.